Okay, continuing on. Now, there's a narrative that started gaining serious traction this week. Bitcoin may be starting to decouple. Now, for years, the criticism has been the same. Bitcoin just trades like a tech stock, high-risk asset, moves with the market. But this week, that didn't exactly hold up. While Bitcoin pulled back about 4 to 5% from its highs, the S&P 500 dropped right alongside it. And gold? Down roughly 10% since early March. Let that sink in for a second. Bitcoin, the so-called risk asset, held up better than gold. And it wasn't just Bitcoin. We also saw relative strength across major altcoins, Ethereum, Solana, holding structure even as macro pressure built. Now zoom out, and the total crypto market cap stayed in a pretty tight range, roughly $2.46 trillion to $2.65 trillion throughout the week. So what's driving this? It comes down to one word: positioning. You've got ongoing geopolitical tension tied to the Strait of Hormuz, oil volatility shaking traditional markets, rate uncertainty from the Fed. And in the middle of all that, capital is starting to look for alternatives. And for the first time in a while, Bitcoin is being treated less like a speculative trade and more like a store of value under pressure. Now, before we get carried away, this is not full decoupling. Not yet. Because on heavy risk-off days, correlations can snap right back. But if this trend continues, if Bitcoin keeps holding up while traditional markets struggle, that digital gold narrative, it's going to get a lot louder. And with that comes a very different type of investor.